Ladies and gentlemen, hearty good evening to all of you and a very warm welcome to the Economic Times Best BFSI Brands 2018. I am Kavya R. Chavli and I'm truly delighted to join you all this evening indeed. And once again, I'm going to request everyone who've just entered the hall to please take your seats. Thank you very much. While Mr. Surendranath also gave the safety briefing, we'd also like to let you know that's right, we've got the exit doors right over here. So in case of any emergency, we're going to request you all to proceed to the nearest exit and then probably tweet about it later. So first up, safety, and then probably the tweets. But on that note, we're also going to urge you all to keep the tweets coming using hashtag #ETBestBrands. All that you get to experience here, all that you get to hear from our speakers as well. You can keep the conversations going on Twitter as well using hashtag #ETBestBrands. Well, on that note, after recognizing great success with many major research-based initiatives such as Best Brands, Promising Brands, or for that matter, Inspiring Business Leaders of India, etc., the Economic Times, along with its knowledge partner, Deloitte, is proud to announce the second edition of the Best BFSI Brands 2018 in continuation of its Best Brands series. And ladies and gentlemen, our live webcast partner is 24 Frames Digital. And on that note, let's get the program started. I'd like to invite on stage the Senior Director, Conferences and Special Initiatives with Times Strategic Solutions Limited. Please put your hands together to welcome on stage Mr. Rishi Kapoor as he presents the welcome address. So if I may please invite Mr. Rishi Kapoor, let's have a huge round of applause there.
Good evening, ladies and gentlemen. It gives me immense pleasure to welcome you all at the launch of the second edition of the Best BFSI Brands coffee table book. The BFSI market in India is undergoing major transformations with multiple policy initiatives directed towards enabling transparency and developing a stronger outreach. The intent is to foster positive business sentiments and improved consumer confidence to prop up the country's economic growth. The ET Best Brand series was launched 3 years back, and it has continued to include the various industry sectors under its gamut. The aspirational value of the Best Brands initiative has grown over the years, and this evening is our attempt at acknowledging and recognizing the leading brands in the BFSI sector. These brands have, despite multiple challenges within the BFSI sectors, like policy and structural changes and slowed global economic growth, have stood the test of time and are truly inspirational. The second edition of the Best BFSI Brands coffee table book presents the bright spots within the India BFSI domain, analyzing their performance based on market capitalization, diversity of offerings, and brand recall. I would like to thank each one of you present here for having made this time for this celebration, and once again, welcome you all.
Thank you very much indeed for setting the tone for this fantastic evening. Well, on that note, ladies and gentlemen, I'd now like to invite on stage Mr. R. Amalor Pavatan, who's the Deputy Managing Director with NABARD, to please come on the stage and also present the special address for the evening. Please put your hands together, ladies and gentlemen, and let's welcome Mr. R. Amalor Pavatan. Warm welcome, sir.
Good evening, ladies and gentlemen. It is indeed a privilege to deliver this keynote address. I do not know, I represent a bit of each of these BFSI from the NABARD side, and also the clients at the ground level. I share very briefly because it's already stale, the budget, everything has been discussed, but still, the perspective from our side, I would like to present a small note. The present BFSI approach in the budget, what I could see is focusing on the differentiated financial services of all kinds. Because the focus is on MSME, agro-processing units, financial inclusion, delivery of bank-linked social benefits, and also a huge level of digitize financial transactions. These are all some of the things, the media through which the government is trying to address the problems of the supply side. On the institutional side, I see lots of initiatives coming up. Is basically a consolidation approach. The concerns are also there along with the consolidation. Is the risk levels of the banks and financial institutions are increasing and less understood. So everybody needs to pull up their stocks to understand what is it all about. Once again, discover what is the risk in which we are doing our business. The second important thing is the contract enforcements. There is lots of legal support that is required to enforce contracts. Still, we are struggling with various instruments that is available. The effect of that is really not forthcoming, I would say that, because including the latest one is not adequate enough because there are a lot of repeated litigations, etc. It takes time, energy, and also a lot of cost involved in enforcing contracts. So a lot of simplifications have to be done in that direction. First time, the regional rural banks are onboarded and they are going to market in this current year. So that's initially a few banks will go and then we'll have to consolidate them more in order to meet the customer expectations, the investors' expectations also. The margins are increasingly under stress in a competitive environment. Each one have a different kind of a working model, the business models and the delivery models. Based on that, the margins available at different players is very much limited. So we need to learn improving the efficiency of our deliveries. The important consolidation process also includes India's and also the technological challenges. There's a lot more of technology applications have to come in. And in this consolidation process and the technology process, things have to be done at individual or corporate level very carefully. Because each one is an investment, it is going to give returns on a long run, whereas the margins are under pressure. We used to say in poultry industry, if you give 1 grain more to your poultry farm, you are in loss. So that's the kind of situation that we are facing today. If you are a little bit making error somewhere, you will enter into losses. So therefore, the careful planning and the facing of this consolidation process has to be attempted. Coming to the real sector, I find that major thrust has been on the infrastructure. The rural infrastructure, there's a lot of discussion, a lot of paragraphs written there. It's the Grameen markets, the first time ever, the wholesale market reforms are being addressed. Even though the amount allocated is only 2,000 crores, but in principle, we are trying to promote the small markets in the villages and panchayats, 22,000 of them, plus linking them with the higher markets, 585, terminal markets we are going to link. And it's a very big challenge, and right now there is a committee in the Niti Aayog and also SEBI working on how best we can integrate these things with the derivatives and the spot markets. And the markets are widely spread across the country, and there is, again, it is in the state subject. There's a lot more challenges coming from the states in terms of regulatory prescriptions and harmonizing the agricultural trade in terms of market integration. Along with that, market infrastructure, the connectivity and the technological, the e-norm, e-market integrations also is very important, but the connectivity in many places of the rural areas is still remaining a challenge. Therefore, if the connectivity is not there, how fast we can transmit the price information so that the people can discover the prices to their commodities. Then second in that area is agro-processing infrastructure. It's one good thing I find in this budget. It touches on entire value chain of the agriculture sector. Next is agro-processing sector, agro-processing infrastructure, which need to be addressed through the cluster basis, and it is commodity specific. We have done in the past, the special economic zones came, The export zones came, but all that could not deliver the results that were expected. So with some modifications, we are going to come out with the kind of agri-processing infrastructure strengthening, which needs a lot of investment in agriculture sector. It may need at least 2 lakh crore of rupees in order to strengthen this agro-processing sector, which has got a huge potential in our country. And the procurement side, the food subsidy has been one of the big drag on the government. There need to be a lot of efficiency improvement in terms of food procurement. More than food procurement, the benefits of that has to reach the farmers. Now, the Prime Minister has announced that the MSP will be declared for all crops. But still a lot more need to be done. Who is going to procure at the MSP and what kind of a mechanism has to be put in place. Niti Aayog has to work on that. But nevertheless, if you look at the farm sector, I would like to dwell on this little more because it has got direct link with our GDP estimations. The farm sector prices, even if you take MSP, how much it has grown last 30 years, maximum it has grown is about 58%, 58 times. Whereas all the rest have grown more than 200 times, meaning that the farmers or the producers are still getting very less of the total amount. The second component of that, the poverty or distress in the agriculture, comes from the way of cost. Earlier, people used to have all that internally, that is, including ploughing, family labor, etc., which are not purchased. And today, 90% of the input is purchased by the farmers. So the purchase price has gone up, the cost has gone up, the sales price has not gone up to that extent. So margin gets squeezed, and that's a distress that is created among the farmers. So this is the big challenge that we need to address. On one hand, if you increase the price, there is an inflation and related issues. If you don't increase the price, there is a distress, 60% people, and then we have to come out with more and more social kind of an intervention in this. How do we make the market work towards efficiency and delivering the required income levels to the farmers? And we have the ambitious target of doubling the farmers' income by 2022. So lots of efforts have been made on this. We have to wait and see by 2022 whether we will be able to achieve it. NABARD, from our side, we are running pilot on this. And the third area fourth area which I would like to touch upon the infrastructure area is rural communication infrastructure. Now, we are trying to link every panchayat, every village electronically across the country, so that we are able to communicate with the people, we need to understand what is going on there. So the roads, micro towers, etc., that is being built up, and there is a substantial emphasis on that also. And the villages, which I told you, the market has to be connected with the nearby market and to the other social benefits like hospitals, etc. There has to be proper roads. The rural roads is being emphasized more in this budget. Then the last one is the urban infrastructure, the smart cities, the expansion of ports, and additional railway lines, etc., the bigger kind of an urban infrastructure that needs lots of investment that is going. Now, having said that, lot of thrust on the infrastructure, consolidation of the banks, differentiated services, entailing lot of financing, how this financial sector is going to address this and how the government is going to address this. Some concerns I would like to express right away. Is one of the very important consideration is the fiscal deficit, which many of us already discussed this in different forums. Now, the newfound methods of government raising money is a cause of concern. The EBRs is growing very fast, the extra budget borrowings. Today also there have been a lot of discussion on this in the DFS. The issue is that how the government is going to raise it. Earlier it was straightforward deal, going to the market and the raising funds. Now, corporates, all government corporates have been asked to raise funds which will be serviced by the government. So it is not adequately factored into the deficits as it is. There are implied deficits in the government deficit. So in the right away, the explicit deficit is 3.3% or 3.5%, but the implied deficit, if you add, it will be much more. Some more problems are there. That is the state subsidies, state deficits. State level, more and more central schemes are pushed to the states now. States do not find adequate resources. The state taxes are not raised so much. So state find it difficult to meet all these things. And most of the times, even for a cheapest rate, 4.75% NABARD is lending, many of the state governments do not have adequate borrowing power and servicing powers. This is very pathetic as far as the state is concerned. Now, how are we going to address this? Government cannot borrow, state governments are not able to borrow, and if they borrow, the fiscal deficit is going to shoot up beyond benchmark limits. Then how is that government is going to raise money? We do not know. So the GST is expected to give good results in terms of revenue collections, but we'll have to wait and see how much the industry can respond to that. The next is public participation versus the credit climate, which is actually leading to NPAs at the social sectors. So the more and more public distribution of the loans or credit products come into the shown, the more people understand. I'm dealing with the perception of the public. If the minister comes and distributes a loan, even if it is a loan, people perceive that it is a dole. So this is a huge moral hazard that we are going to face. So how are we going to deal with this when the government wants to integrate or more involved in this in the society, and the perception of the people are going to be different. So this is the huge challenge, perceptual differences we have to deal with. And inflation, there are demand-supply gaps, as I told you. There are so much demand is being generated. And the supply side, who is going to supply this? Now, infrastructure financing, for example, who is going to have a long-term finance with us? Only few, in our country, we do not have adequate long-term financing sources. How much pension funds can supply? How much insurance companies can supply? There is so much of demand is required. Even that is going to be a big challenge. If you want to finance infrastructure, we need to find long-term finances available in the market. Short-term, yes, for 10 years, etc. Okay. Who will finance for 30 years, 40 years? Who is having money of that kind? So this is a big challenge for us. Then regarding the MSP, there's a lot of controversy about that. 1.5 times the government has announced. And there was one report saying that they are going to recast the cost calculations, which will result in 40% less than what they are giving. So they are asking that you have reduced the cost by 40% and increased the MSP by 1.5%, 1.5 times. So actually there is not much left in there. And that also, whether it is available to the farmers, we do not know unless somebody procures at that levels. And what kind of mechanism that going to be put in place to compensate the farmer level procurements, we are yet to see with Niti Aayog has to come out with some methodology of doing it. And the relaxing of NBFC refinancing norms from AA to single A. So that means that banks, financial institutions are pushed to finance lower grade NBFCs also. Now, there is an increasing trend among the banks that they are less going on the retail side, and they are very happy to give bulk finance to NBFCs. Many of the NBFCs, my friends here may appreciate that, they have gotten almost 1.2 times, 1.5 times of their requirements sanctioned from the banks, because banks are happy to sanction these things. But they are leveraging on that. But the issue is somewhere along the line, somebody has to bite the bullet of risk. So if you can control the price of the credit and also the risk is elevated, then there will be episodes of problems that will be coming. And the growth in the retail savings, the savings rates are not moving up. Banks are under pressure not to move the savings rate, and long-term savings are not incentivized adequately. Then again, there's a problem of supply of long-term credit. Neither the bank have nor the consumers are given adequate incentives to save for long-term. That's going to be a huge challenge. Then another one is about the reduction in the corporate tax below 250 crores. We have seen in the MSME area, that is in the 90s and 2000 decades, the more you stress on the MSME and give incentives, you find more MSMEs going. There will be more companies opened up, even for smaller activities. Once they outgrow 250 crores, they will open another company for something else. So there will be number of companies opening up on this. Then that is going to have a different kind of a problem, which we have seen in the history. So that also, this is my apprehension. Okay, that we have seen a company which we are not generating a big company. We are not incentivizing forming conglomerates, MNCs, etc. We are more emphasizing on these smaller companies. I do not know how we are going to go forward in terms of whether this incentivizing will work efficiently. Then the venture capital and angel funds are being embraced. It's a very good industry, fast growing industry, and we need venture funding for all this. But along with the venture funding, it is necessary that we put in place proper the enforcement norms, enforcement of contracts. That's very important, because for venture funds also the contracts are to be enforced quickly and expeditiously. Then the long-term liquidity versus the speculatory kind of an investment. There is a lot of incentive for investing shorter. So now it will, I do not know whether it will lead to a lot of speculative investments or investments of the nature of a speculation. So that has to be seen, especially the mutual funds will come under greater pressure. Maybe my friends from mutual funds, they may discuss this, we'll ask this. Then the tax administration and complexities of GST and all those things, I don't need to mention, you understand. There are so much complex procedures and some lots of simplification is required, especially when we are emphasizing the MSMEs, their understanding and compliance levels are very low. So unless they invest on these compliance separately, they will not be able to comply. There's a huge cost on the MSME on the compliance. So how do we reduce the compliance cost for MSMEs? That's another challenge that we need to address. Otherwise, either they'll be short of compliance or their margins will get squeezed and the MSMEs will not be making adequate returns on this. Then there will be a problem. Then last one is that, unfortunately, which not touched in this is very important. Going further 1 decade, 2 decades down the line, we are going to face two very important things, the land and water. The natural resource has been consumed by the industries, various industries, including housing and whatnot. That is going to be a big challenge. Now, the water bodies are evaporating. Now, everywhere there is a fight for water. And maybe water becomes more and more precious now. Now, what is that in the budget? I could not understand in managing this water issue. If we fail to manage it today, 10 years down the line, we are going to have a huge challenge. Forget about other developments. Water will be the single most challenge around the world, more so for India also, with the diversified the state concerns, etc. So improving the water efficiency, improving the water availability, better usage of water, these things have to be taken care. Unfortunately, budget doesn't touch upon any of these things. And also the soil. The last budget talked about the soil health cards. I think many of you are not from agriculture field. Once you apply the chemicals, the soil becomes useless. It loses its what you call the ecosystem. We spoil the ecosystem. And then however much you add from outside the chemicals, you cannot make good for that. So you can see lots and lots of land becoming useless and no more useful for the agriculture. Then it's going to be a big, big problem and challenges. I think I just tried to highlight some of the concerns and challenges before you. And I would like to listen more from how our financial fraternity is trying to figure out their opportunities in this budget. Thank you very much for patient listening.
Well, thank you, sir. If I may please request you to remain on the stage. So if I may please invite you back on the stage. And I'd like to request Mr. Rishi Kapoor to please come forward to also present a token of gratitude to Mr. R. Amalor Pavanathan for his valuable presence and sharing his perspectives with us this evening. Thank you once again. Well, taking forward these perspectives, we'll now march ahead into our panel discussion on riding the wave of structural changes in the BFSI sector. Once again, I'm going to urge our members of the audience to keep those tweets coming using hashtag #ETBestBrands. And with that, let me now invite our panelists and our speakers on the stage as well. First up, our session moderator, may I please invite Kalpesh Mehta, partner with Deloitte, to please come on stage. If I may please invite Mr. Kalpesh Mehta. Let's have a huge round of applause to welcome Mr. Mehta as well, because he's going to be responsible in extracting all the perspectives from his fellow panel members. So on that note, our next panelist is Mr. Ankur Kharbanda, who's a zonal CEO with Apollo Munich Health Insurance. Mr. Rakesh Jain, CEO, Reliance General Insurance. Mr. Kailash Kulkarni, Chief Executive, L&T Investment Management. So a warm welcome indeed to all of you. And with that, I'd like to also hand over the proceedings to our session moderator, Mr. Kalpesh Mehta. You prefer this? Sure.
Good evening, friends and learned members on the panel. There has been a lot spoken about the structural changes which has actually happened in the financial services, BFSI segment in particularly, by the previous speaker, and that was quite intense. I'm sure you would have kind of captured some of them. I will just kind of pick up something from there. What it started as a kind of a government agenda of financial inclusion, digital India, it moved into a little bit of demonetization, banking licenses put on tap, differentiated licenses came in. They came up with more transparency through, they claim that they come up with the transparency through GST and a bankruptcy code. Insurance, some of the steps are taken on crop insurance and mandatory insurance for the funds being parked with banks, etc. Realizing that the stress on the bank through the several changes which are occurring for the bank in terms of the bankruptcy issues of the certain lenders. There are issues relating to the gap which is getting transitioned into. There is a Basel III norms getting enforced in time to come and requiring the banks to do a recapitalization. That was also one of the themes which was being captured in the last financial announcement. What we are trying to see that what parallelly happening is that in the market, what is happening is mobile penetrations, fintech players, and a differentiated products being offered, and those are all changing the kind of what structural structure of the business in the BFSI segment is changing in that behalf. We've kind of tried to analyze that into a quick 8 forces which are kind of in our Davos recently. What we had as a World Economic Forum, we released a report which identified 8 forces which we believe are the significant forces which affects the financial service segment, banking and financial services. One of that is cost commoditization, which is every financial service player is actually looking at which are the costs which they are incurring, which is actually can be commoditized and can be converted into a solution which a bank can use or a financial service provider can use to minimize the cost to serve. Profit redistribution, which is another disruptive force and which we believe it's going to change significantly as the conventional business formats were actually having a profit being distributed to different intermediaries. Now the fintech players will actually disintermediate and become probably a new intermediary, and they would actually distribute the profits differently to all the players. And experiencing the ownership is, I think, a critical one. Who owns the product is actually who owns the customer, who owns the customer and who can actually take that product to the customer. And probably you need to actually differentiate whether you want to actually manufacture a product or you want to distribute the product. And that's what is the kind of a key disruptive forces, which is through the use of digital technology people are using. There are platforms which are increasing and which are becoming more and more relevant. I mean, government started with Aadhaar as the first one, which is now actually there are several players who are creating their platforms which are kind of more disruptive in that sense. Data monetization is the key, and whoever has an access to the customer captures the data about that customer for the whole ecosystem of that customer, which is relevant for them. And that is what is being used to actually monetize to serve them larger through providing more customers to them, to providing more products to them. Bionic workforce is another sixth one which we have identified and which we believe is going to be the sea changer. Bionic is nothing but a robots being used for doing processes which can reduce cost, doing the processes which can actually more intelligently understand what the customer needs, and then actually leads to serving, cost to serve being reduced, cost to manage and supervise being reduced. And there are, because of this, there are emerging systematically important technological platforms which are becoming kind of more changing the structures of the financial services. And financial regionalization is the last and the most important one, which we thought that is relevant and is changing the BFSI landscape. And what we have tried to do is we said that what is the learning or takeaway from this is that there has to be a kind of a seamless onboarding of customer, which will be kind of more relevant for each of the segments. Have an anchor product, capture an ecosystem, create and manage an ecosystem, leverage analytics, data analytics, through which you can actually do more work with the same set of customers. Social media is one of the driver to actually engage with the customer. And that is the sea changer, and that's, we are seeing that in all the segments. And target the underserved, which is broadly a government policy agenda, and also it's being actually more and more customer, more and more financial transaction, and more ability to engage them and include them in the financial services clients. Clear understanding of the customer behavior and requirement. Those are the kind of key takeaways which we captured. Now moving on to our panel discussion, which I can probably, I'll move there to. Sorry. We've identified few questions, and of course, we'll run them through quickly, and we'll probably take first, what do you envisage as an evolution of the segment in which you belong to is coming in the coming decade? How it is going to pan out, especially capturing what is kind of partnership which will emerge, kind of value chain integration, and kind of customer expectations. How will you actually build that into coming years in your business? So can we start with you from general insurance perspective?
Yeah. Thanks, Kalpesh. And I think all said and done, we are part of BFSI, but let me confess that general insurance is the youngest and the most native segment of this space. You know, most of you would have recognized a few general insurance companies in the last year or two, perhaps. You know, the reason is very simple. It's a lifestyle product. It really emerges after people cross a certain threshold. People get into creating assets. That's where they really look at risk transfers. It's also a function of literacy. It's also a function of, you know, how much people believe in risk transfer, how much people are willing to pay for that. So awareness is a critical, you know, factor over here. Having said that, this is ultimately what people need. This is thankfully, in this volatile times, we'll say this is not product will give you a return back. So, you know, we are that way a bit, you know, cushioned. But it's something which I think will grow significantly in our country. On a some relative comparative, I would say, evolution for us as an industry, you know, we are about 1,20,000 crore at just about 1% penetration to GDP. 1% is thanks to the government of India, which really gave crop insurance like an insurance scheme and not like a subsidy. That's why it touched 1%. Otherwise, it was languishing between, you know, 0.7 to 0.8 for good 16 years before this, from inception of or the liberalization of the insurance sector. So its structural inclusions are critical over here. But the global average is 2.6. The best in the countries in US or in Europe, like they are about 5. So if you see from 1,20,000 to 2.6, it's a 3 lakh crore industry in terms of opportunity. That's the way, you know, we'll see the evolution taking place. And this will take place for a very simple reason. I think India is now like per capita of $1,800, $2,000. China is 4,000. If you really see, China is 5 times. So what it tells us also is that, you know, every dollar which comes in, insurance is actually going to $3 or maybe even higher. So structurally, the catch-up effect will ensure this industry stays, you know, ahead. You know, people, of course, we all keep on saying, as insurers, that even with, you know, 6.5% growth of the economy, the insurance industry has done 18. So there's a multiplier of about 2.5 times, to the basic growth rate. But if the economy was to touch 8, we're likely to get a multiplier of 3, so which is like 24. So structurally, it's a growing proposition. It is something which is getting created. It's created around consumption. It is getting created around what people need. When we talk of customers, we talk of all types of customers. Government, of course, we have heard in the budget. For the first time, what thrills me after 17 years in this industry is the #1 scheme of the government is an insurance scheme. Insurance. So that reflects what we have done. And I think overall, it's something which this industry will need to deliver constantly to meet the customer expectation. Delivery obviously means, since it's needed by everybody, how are you going to deliver is a big question. How efficiently will you deliver is a very critical question. And eventually, can you sustain this or not? Individual companies will continuously grapple. So I think it's a great opportunity, and that's how we expect the evolution to be.
Sure. Thanks. Kailash, if you can
so I think
from asset management perspective.
Yeah. I think in the last 1 year, I think the asset management industry has been quite well represented in the press. The kind of unprecedented flows we have had has been a very clear counter to the FII money, which brings a lot of stability in terms of we are not dependent only on the FII perspective. I think despite this large amount of growth that we have seen in the last 1 year, finally, when we sit back and think, we are just about 3.5% of the population who are investing today. So clearly miles to go. The good news is that the awareness levels are going up significantly. I think the main trigger that we are going to see, and not what we have seen as of now, is the fact that technology is really coming to our, to our benefit, and more importantly, positive regulatory interventions. So one of the big interventions which the government is working on, the regulators are working on, is the common KYC. And once this happens, yeah, that's right. So across the financial services sector, and once that happens, it's like today people are getting used to buying goods on e-commerce sites where you buy, you go onto a site, you select, you pay, and you exit. You are going to soon see a situation where you will just pick up a mutual fund, pay, and exit because you are already KYC'd. I think these kind of regulatory positives, along with technology interventions, could see a big fillip to the kind of numbers that we have seen as of today. So if 2017 we believe was a great year, 2018 you could see actually far more flows because 3% can surely move significantly higher in terms of the flows into equity and fixed income as we go ahead, because people are wanting to beat inflation today. And I think the most positive aspect is for us is, along with everything that is being said, the awareness levels about savings moving into investments is growing at a very rapid pace in India. And so long as the investmentization happens, I think it's a very big benefit for our industry.
Is that increasing because of financial inclusion, or you're just seeing a shift in financial literacy?
It's a lot to do with financial literacy. Financial inclusion is at a little lower level, but what's important to note is that even at the lower level where financial inclusion is there, the consumer is not satisfied today with a 4% return or a 7% bank return. They are really looking forward to move this money into assets which tend to beat a 7% inflation. And the choices are limited. So clearly, the mutual fund industry stands out today.
Thanks. Ankur, Rakesh just mentioned about the budget which had a primary announcement. It started with the mention of the health insurance. So could you give us a perspective on health insurance?
Sure. Thank you, Kalpesh. Good evening, everyone. Really, this budget gave us a lot of things in terms of, this was the biggest item this time. Just to give you one perspective, we are growing as an industry by 20% CAGR from last 10 years now. Still, the overall population, which is actually health, has a health insurance, is less than 5% today. So there's a huge population, which he said, in terms of 10 crore, people, which accounts to 40 to 50 crores of families, which is around 30 to 35 to 40% of population, will now be able to get a health insurance access. There have been earlier as well some schemes like that in terms of RSBY, and certain state governments are also doing it. But now with the budgets coming from the central government, and this being as the main prime activity for the government, I think this makes a lot of sense for us. It will increase a lot of awareness as well in the consumer mind, not just the BPL. Otherwise as well, we feel it will create a lot of awareness into the mind of people who are living here as well. So it will definitely, and we would like to be part of, definitely all insurance companies would like to take a pie out of that. On an overall space, this was on what the budget gave us, and this is also new for us, and we are still into understanding it more in details to how do we use it and how do we ensure that we, realize this. But overall, just to give you another perspective, out of India today consumes 7 lakh crore in terms of healthcare expenses, out of which 5 lakh crore goes into the OPD expenses. But unfortunately or fortunately, all insurance schemes are working on the balance 2 lakh crores. Nobody is working. Today as an industry, we were not working on the balance 5 lakh crore which goes into the OPD expenses because of various humongous reasons. But I think structurally things are changing, and as an industry we are moving, not just getting the covers into the 2 lakh crore, which is the inpatient, but things are getting into the next level of it, and that will see a big change in the industry and the overall volumes when people, all of us, will get into the consumption of the 5 lakh crore which is spent on healthcare overall expenses. In terms of other aspects which are changing in the industry today, primarily health insurance overall has been used as a health financing product. But I think over the next decade, with some structural changes which are required, the health financing will change to health management of a customer. It's a big change when it comes from a health financing, and everybody would try to get into the health management part of it, which is also changing. In terms of the customer expectations, it's a very amazing thing which has happened from last 5-6 years with the coming of the Ubers and etc. The customer expectations from each of the product, each of the services, they try to compare it with the best of the online platform which they have. So, but insurance organizations and people like us feel that we are insurance companies using technology, but we have to compete with people who are technology companies, and doing some more other services. So there are a lot of things, which will see a change in the next 10 years. I feel that things will move into that direction. That's it.
Thanks, Ankur. You mentioned some of the numbers which are closer to or number of times the bank recapitalization numbers. I'll just mention a few comments on other sectors because our panel has mainly insurance and asset management. Something on a lot of asset which has been actually financed in the past has gone into some of the structural issues with those, or sometime the cash flow mismatch which has occurred. And what it is emerging globally, what is being also shown is that now what will emerge is that all assets need at different point in time, different owners will occur. Different people will own this asset or control this asset. Initially, it is the people who actually conceptualized and started the asset, somebody who has matured the assets, somebody who is now managing the asset. So everybody earns their margin at different point in time, and accordingly the financiers at this point in time would also change. And what we believe is that is what government is also right now thinking in a way, where they are allowing a kind of a crowdsourcing for through Inventor and REIT routes for the assets which are being held by entities in some form, or specific assets on infrastructure and other segments, which probably can use those kind of sources of funds. So that is what we believe, that's one of the estimation on what could happen in that sense. And that would probably cover the banking and the private equity, or how these NCLT's assets resolutions may occur. Moving on to the next question, and which again, I mean, which is kind of a standard question which you might have seen many times, is on digital disruption. And how do you think each one of you believe in your business segment will it affect? Over to you again.
I think we insurers take a lot of pride in saying that we have a rich history of risk. You know, we are process-oriented, rule-based, you know, and, you know, most of us would have hundreds of offices, you know, thousands of people, a lot of forms, you know. And if you really see in the 15 years, you know, post the opening of the sector, the foremost thing which is stayed in the mind of a consumer is, will I get a claim? And, you know, that thing, you know, we have not been able to beat in spite of, you know, maybe 25 private companies and a few government companies, maybe thousands of people now across the country, and, you know, a lot of distributors. The foremost reason for that is basically, you know, the consumers are meant to give so much of information, so much of, you know, things, some of them quite delicate and intricate, because every claim is in some sense a bit customized. It's not a very ordinary thing. An accident happens individually or uniquely. And often in an environment wherein we are kind of infatuated by, you know, the mindset of a fraud or a customer, you know, ripping you off. You know, we end up creating so many things which, you know, structurally is difficult to say whether it is good or bad. In some sense, it's also like compliance. Sometimes you say you have to settle a claim promptly, and then sometimes people say you have a fiduciary responsibility to other policyholders. You can't really charge him an extra premium. So you're always running with a dilemma. What one has realized in the last, you know, 2-3 years is what technology does to our business. Something which used to be more like an automation, something record capturing, you know, recording it and keeping it for 8-10 years, has all of a sudden in the last couple of years become the central to what you do. It's like, how do you do your business? You know, most of the times now, you know, I think we'll start is what technology will do first, and then do we have good people sitting on top who can take decisions. Structurally, the basic thing which has changed, two things rather. One, India is also becoming a part of a connected world. You know, we are no longer living in bits and pieces of digitization or automation. And hence, when an Aadhaar happens or when a Vahan happens, which means basically your, you know, your motor data of all the RTOs, you know, we are structurally now saying that we can pull the data, we can connect the data, we can see it, and we can now work towards, you know, getting the information real time. And then, resultantly, the customers are delivered the things on a real-time basis. So in some sense, the big disruption for us is, are we prepared, or our rules, our experiences are well calibrated to give an instant response to any situation, an instant response to a proposal, an instant response to a claim. And I think the consumers are not willing to differentiate insurance any different from what they do maybe with an Uber or maybe with a, you know, an Amazon or a Flipkart. They simply don't understand why should an insurer take a longer time. And that is where the apathy grows if an insurer is not there. So I think for us, disruption is like we have to really see technology as central to what we do. Most of the times I keep debating whether me as a CEO or a few of my colleagues are really competent to judge some of the technological changes and its impact. You know, we all get guided and influenced, that is true. But then every business is meant to be unique. Every company is meant to differentiate itself, even in a standard industrial environment or a high opportunity environment. And I think it's becoming a, you know, very critical aspect of every CEO, including me. A few things which, I think which works in our favor now is that the people are coming in a calibrated way because incomes are coming in, people are creating an asset. What we are trying to build is, an embedded situation within that. So if people buy cars, we would like to embed an insurance support or an insurance software within that. We would like to embed a claim service, with a network within that. So structurally speaking, insurance is getting inside the things which in any case are likely to exist. You're not trying to create something in parallel or something as a overlaying architecture, even though people need it. So I think this is a huge shift, and the shift aggravates because we have in our industry companies which are 50 years or longer, who have thousands of offices and thousands of people. And at the other end, we also now have a couple of only digital companies. So in the budget, while we all say digital is this thing, but for GST, I still need to show an office in every state. So we are kind of debating in our minds, how technology has really come of age. But if we were to believe that we are a phygital company now, I'm sure we are increasingly becoming digital.
Thanks, Rakesh. Just one follow-on question, and what I've experienced myself when global insurance model on general insurance especially versus India, especially the cars, which you mentioned, where globally, if you see the cars are insured, not the driver is insured. So you can individually get an insurance. While you're driving the car, you can use that insurance. Yeah. Here, you actually insure a vehicle which may be costing anything, but can be driven by somebody who's earning 20,000 rupees.
So Kalpesh, you're right. Actually, these are two models. These are two ways of doing these things. Of course, there is I must say, a car insurance has got two elements of risk. The first is obvious, the most obvious is the damage to the car, which is kind of universal. So by taking a policy on the car, you cover it. The second is basically any kind of consequential liabilities arising out of any accident. It's like hitting a person on the road, what happens? So in some parts of the world, for example, in US, it is driver's liability, which means every driver who acquires a driving license, it's mandatory for him to have a driver's insurance policy, which predominantly also, the insurance company can track his driving record, price him appropriate to the way he is, and differentiates vis-a-vis maybe any other member of the family. Whereas if you go down to UK, it is actually still like a family policy, or maybe anybody can drive it, wherein the experiences of drivers are actually built within the experience of the vehicle. I think a large country like us with 1.3 billion people with, different stages, different aspirations, a driver's liability is a good thing to happen. But since we have, adapted or adopted a lot of laws out of UK, I guess we continue to build on that, and it's going to be a big shift. The other challenge is a lot of the drivers in our parlance are actually commercial vehicles. And when there is a lobby, a strong lobby, it's a bit of a difficult choice to, go for.
Thanks, Rakesh. Kailash, would you like to give?
Well, in our industry, the interesting fact is that the digital disruption is happening mainly because of the consumer. We have no choice but to adopt to technology and in a very quick manner. Whether it is on the sales front, whether it's on the servicing front, it's across the length and breadth of the organization. I think today what we need to realize is the value chain. The consumer behavior is changing dramatically. Earlier it was the 60-year-old father who was involved in the financial decision making. Today it is his 25, 30-year-old son or daughter who sits with him and takes that decision.
The millennial.
The problem is the father has the hour and a half to sit and have a discussion, talk politics, economics, and then talk of investments. The 25 to 30-year-old has no time for all that. They want a quick decision, they want it clean, cut, and deliverable, and they hate paper.
They may be more short term.
Yeah, they may not be short term. I don't think the fundamental attribute is changing about long-term investment, but it's the time they are willing to spend to take the same decision which is changing very fast. And to that extent, the entire value chain of people who advise them, manufacturers like us who, actually make products, we need to keep it into a 3-step simple process. So if we don't do that, the person who does that will actually win. And that, I think, is a big driving change that is happening on the technology side. On the servicing side, I think that's where the real disruption is happening today. Because servicing has become so integral as part of a financial services firm, I think the most important thing is that when we classify the kind of queries that we get at the call center or at the desk, you can really say that 5 queries account to possibly 80% of all your answers. And out of the 5 queries, at least there are 3 to 4 which today you can have a technological intervention to give the answers. You don't really need to be physically present there, getting it out of the computer and handing it over. So again, that is something which saves time, saves cost, and I think you referred to this when you spoke from the podium.
8 factors.
Yeah, out of this is actually, this is something that we see. So whether you want to know your account balance or you want an account statement copy, you want your account to be emailed to you really don't need to have a physical intervention in terms of a person addressing those kind of queries. What you need is a chatbot, and the chatbot just executes it for you. Or you just need some few keywords which are captured, and then the system takes over and sends it. Are we there yet? The answer clearly is no. But I think all of us collectively in the mutual fund space are working towards getting there very, very fast. And today, technology makes it that much easier for us to service the investor. Also note that we are capacitized to service today about 6.5 crore folios. And if this really quadruples to 25 crore folios, you can't really add that much manpower because that's adding cost. So clearly, adopting technology because of the changing psychological behavior as well as the acceptance of mutual funds is something that is very, very clearly evident, as we say. If you just look at the number of new customers added in 2017, it's nearly about 60% odd on the entire base that we have added in this 1 year. So that's the kind of growth that one sees, and we have no choice from a technology disrupting.
Will it also, just one follow on that, the profit distribution which occurs in an asset management, which is your asset management fees which you earn from the funds and you pass on to people who help you source the customer. Will the digital disruption change the manner in which that is being distributed currently?
Yes, it will. It's a good question that you raised, and I'd like to give you some examples that really makes it a different. The traditional mindset that we all carry is that unless and until the advisor and the customer sit together, have a conversation, there's a trust established, we would not like to part our money to somebody whom we don't know. That's a very traditional mindset. Today, what we have seen is in the last 1 year, the number of fintech platforms which have actually come out giving advisory services for people to invest have been humongous. And many of these fintech platforms, the total strength of the team running the platform is maybe 10, 20, 25, not more than that.
Right.
Yeah, that's the number of people. And already 2 of those platforms are amongst the top 15 SIP distributors in the country.
Wow.
So what you're really saying here is there is an audience out there who wants an execution platform which is convenient and easy to operate, and at the same time believes that that platform has at the back end done the research and analysis to showcase a set of funds which are
differentiated.
Good. In fact, we are at Economic Times and Times Group, and they have their own mobile platform, which is one of the leading platforms today in India. So what the traditional mindset that you need to have that trust and faith in the advisor while showcasing is not relevant today. People are willing to trust platforms and engage with a person who you really don't know and execute through that person for his or her finances. And I know, I mean, they're from not the life insurance, but I know similarly in the life insurance, the amount of term policies which get bought online, I think the number is just growing humongously.
Growing, yeah. Right, from your health insurance perspective, please.
I think we are no different from any BFSI in terms of what disruptions can happen to all of us. I think I just have a short and simple answer. We feel today disruption from a customer acquisition point of view, from a servicing point of view, from maintaining that customer point of view. All three things are getting disrupted at some point of, in some of the rooms, in somewhere, even in each segment. What is the biggest thing which we feel will happen, especially in health insurance space today, which will change and which will get disrupted, is the change of behavior from insurance has always been considered as the product is sold to the customer. I think the biggest disruption will happen now, and whereby today the customer is buying the policy. So that's which will happen because of various disruptions which will happen. But a lot of people will still have the mindset, no, insurance is still sold. Insurance is still not a product because of the 3, 4, 5%, you know.
Yeah, the newer generation, the
millennials today
wants to predict cash flow.
Correct. So for them, it's so we will not be able to sell products to people. This is what I feel today. They will buy it basis various things. It is already happening. When we do a lot of surveys, etc., 40% of our customers today first go online, check Policy Bazaar, etc., etc. Even then they buy from somewhere else, but still they do everything. That will also change, and that will also move towards that. So a lot of things happening. So this is on the customer acquisition point of view. On the servicing point of view, specifically on a health insurance space, not much has been done today. But I feel that is a big area. But that will require a lot of structural changes as well from a regulator point of view, from a, the provider management regulator point of view as well, from all other aspects. But there's a huge potential of disruption there as well.
Thanks. I think just from one comment on a banking sector generally, in the finance minister's speech also they had covered a concept called blockchain. I mean, they probably called cryptocurrency as a bad word, but blockchain is a good word. And blockchain is where it's been used in the finance minister's speech, which say that is going to be the concept. And I'm just latching on to what Rakesh said. What they're doing in insurance, I've seen that in general insurance in particularly, where if a customer has booked a ticket on a flight and lost a baggage, he's on actually a blockchain kind of an environment. When he actually lands at the airport, doesn't get the baggage, he gets a claim. So that kind of blockchain has been launched, and then I'm seeing some of the trade finance kind of thing which banks have done, which is going to emerge. Having a current account convertibility is going to support that, but in time to see, which will tell us more. And to just broadly sum up our today's discussion, if we have any questions from the audience, we can take them and then conclude this discussion on the panel here. Anybody from the audience would like to ask a question to the panel member? I think if there are any questions, we can take them. Otherwise, I think what emerged as a theme was, I think, what we started our discussion, and key takeaway still remains as customer on. I can just summarize that again. Unless anybody has a question, please feel free to raise a hand, and the team will actually take the microphone to you. One more question, if I can ask you guys. Startups are they come up with different concepts and do certain disruption in some manner. And right now, there is always a kind of a thought which we are seeing in terms of how do we regulate as a fintech startup? Where do they fit into a regulatory framework? Do they just come as a company? Do they just come up as a technology IP owners? Or what do they do? So do you believe that any kind of regulation, will it support the way they would actually interface with your businesses in time to come? Little off track, but I'll take this question through the panel. Since we have some more time and the panel audience is not asking a question.
No, I think InsurTech is a buzzword across the world, and I think it's appropriate to recognize this as a potent force. Having said that, most of the time, people, insurance is the nature of business, general insurance in particular. It really depends on, a lot of people giving services. Say, for example, your car, if it gets accident, you need a garage to repair it. Maybe if you have a health, you need a hospital to give the services. And likewise, you have various people really providing that. What invariably is happening through InsurTech is, that a lot of the people who are specializing in bits and pieces are coming together and forming a part of the insurance chain. And that potentially is a trend. What is difficult to really come to a view whether this is going to be a permanent way of doing it, whether you need a way of regulations or compliances to come in, because this is still at a very early stage of innovation. I'll give you a simple example. One of the startups we are trying to work, most of us are used to, settling a motor claim by, looking at the actual damage, assessing it, opening it, seeing the parts. Structurally speaking, we are used to, physically, assessing the claim, right? We are trying to move into a situation wherein visually, on the basis of photo, basis on the accident, if we can anticipate what are the likely things which could get damaged and really work out an assessment amount on the go. And maybe give a choice to the customer in terms of whether the person needs to go for an immediate repair, or would he be happy to walk away with a certain compensation. Now, these are some of the things which are actually not like insurance. It's like the way you do things. It's like, people are trying on the health insurance to really look at, the color of the blood or your veins and try to figure out whether you have cancer or not. These things, I think, are the big things which are taking place. And I think we are going to see a lot of people coming with innovative ideas, and we must encourage that as a stream. I really don't know whether we are in a state to really regulate or plan this out, actually.
Right.
I think in our case, it's clearly they're registered as companies, plus that you can't really sell funds unless you're registered under SEBI. So it's far more simpler. But because we're talking of brands, I just wanted to bring a brand element onto it, and you talked about social media. So what's becoming very, very interesting today is the fact that when you talk of brands, it's not the brand ambassador as you are traditionally knowing him, who's very big. So today, for example, on Insta, the number of people who have fans or followers who are upward of 800,000 or 1 million or even 1.5 or 2 million are people who are just anyone. They may not have achieved great success, or they may not have been a great motivator in life, but they do have that many followers. And using that man, boy, girl, lady to be a brand ambassador is taking technology to a very different level altogether. And social media is actually ensuring that it's possible to reach out to people through different set of brand ambassadors, not unlike what we have seen in the past. So even that is a big disruption that we are really seeing.
Yeah. Thanks. I think that helps in terms of the input on fintech. I mean, I see that banking channels are actually currently being really stuck on how the fintech players will disrupt their businesses as well, when at times they offer the banking product by just using bank as an intermediary versus the bank selling that product directly to them. With that, I think we come to end to our panel discussion. And thank you very much for being here and responding to some of my questions. Thank you very much.
Thank you very much. I'm going to request all our panel members to please remain on the stage. And can we have a round of applause one more time for those fantastic insights from all of our panelists? I'm going to invite Mr. Rishi Kapoor to please come on the stage to also present a token of gratitude to all of our speakers. And on that insightful note, ladies and gentlemen, let's now march ahead to our next very special segment for the evening. We, in fact, are very humbled to have the presence of our chief guest with us this evening. We have with us Dr. Ranjit Patil, Minister of State, Home, Urban Development, Skill Development and Entrepreneurship, Law and Judiciary, Parliamentary Affairs, Government of Maharashtra, who has joined us this evening. So firstly, can we have a huge round of applause to also welcome him? And on that note, before we get started to our next segment for the evening, first up, ladies and gentlemen, I'm going to be inviting on stage our honorable chief guest to deliver his chief guest address as well to the August gathering. So on that note, ladies and gentlemen, one more time, please put your hands together and please help me welcome on stage Dr. Ranjit Patil. Welcome, sir.
Good evening, ladies and gentlemen. It gives me immense pleasure to be amidst you for the launching ceremony of Coffee Table book. This is second Coffee Table book which is being launched by Economic Times, wherein the best brands of BFSI are being included. Actually, when I got the invitation from the Economic Times, I thought that why should I be chosen for all this thing? But then, especially for a state minister who is having responsibilities of urban development department, the home department, and then coming from a branch with a medical background who has practiced actively medicine for about 25 years as an orthopedic surgeon, my knowledge as far as this banking and financial sectors and insurance was limited to those patients who had been insured with cashless medical insurance scheme, and my knowledge to the banks was limited to the assistance which the bank had given me in my struggling days when I started my practice in my initial days. Well, with all this, I can't shun away from my responsibilities being an urban development player. And as you know, most of the infrastructure projects are being now, which are running, which are in making, especially in Mumbai and Maharashtra. they contribute to the 50% of the projects which are being directly funded by foreign investment all over the India. Friends, I know, and as you all know, that it is the India, as we are marching forward, our beloved and under the auspicious leadership of our Prime Minister, Shri Narendra Ji Modi, who has always been stressing upon the importance of this banking. As you all know that at the very outset of his being into the chair and into power, he had launched Jan Dhan Yojana, which he had stressed because if you want to reach the government benefits and subsidies to the far-flung, they need to be linked with the bank accounts. And so 30 crore accounts were started in his 6 months of tenureship. As India moves ahead with the vision to become an economic behemoth in the next few years, the scale of the economic growth and the inclusive growth achieved will be determined specially by the actual level of prosperity in its populace and the degree of equitable distribution of wealth. And best thing to happen, and to achieve this, BFSI sector plays a very important role. And it has to respond to now the customer's expectation and its satisfaction, the regulators which are required, the technology, the competition, the shifting economic balances, and the landscape which I had seen the transition over the last 20-25 years. There is a lot of transformation. The landscape has shifted and has changed vastly. I'm not I can't say more on this financial and banking and insurance thing, but only thing I know that most of these things which we are using, like the scheme which we had launched, our flagship program, like in last 2-3 days of budget, you must have seen the Ayushman Bharat Yojana, which has been launched by the Prime Minister, which covers about 10 crores of family, that is expanding to the 5 persons in each family, that leads to 50 crore of these persons and the citizens of India. They are being covered by the policy which is called as Ayushman policy, which is being implemented and executed by the insurance sector. Probably this is the largest insurance policy which in the world, as it has been described. Even in Maharashtra, our Chief Minister has announced about 6 or 7 months back that all subsidy benefits and all beneficiary schemes will be extended to the far-flung and even the ignorant people who knows mobile, that they should be transferred directly to their account so that there will be no human interface, there will be no leakages, there will be transparency in the system, and all this is being done by the banking sector. I am very much proud that this banking sector and the insurance sector is being contributing to all this thing. With all this thing, I owe all success, and I am proud, and I should acknowledge that the Economic Times is always taking lead into all this thing. Whenever I want to see and enlighten me for something in the banking and the investment and the insurance sector, it is the Economic Times which I refer to, and especially the Urban Development Department which I was talking about and I'm having a portfolio with. The infrastructure which we are taken into hand is being funded by various banks only. I am proud that the competition in these banking schemes had led us to the very low interest rate with subvention, and then there is holiday to the interest also. So all this thing is being done because of the more competitiveness in the field. This has helped improve infrastructure of this country also. I owe all success to Economic Times, and I am very much thankful for having called me maybe that in future, if something is required for the banking sector from the government side, like from government of Maharashtra, I would be first person to help you for as a catalyst between you and government, if you have some proposal to finance some infrastructure project. So once again, thank you very much. Thanks.
Thank you very much, sir. If I may please request you to remain on the stage, and if I may also invite Mr. Rishi Kapoor to please join our chief guest on the stage as well. And thank you very much indeed for sharing your valuable address and also for your valuable presence with us this evening. Well, on that note, we'd now like to march ahead and also, that's right, have the unveiling of the cover of the coffee table book for all of you. So I'm going to request Dr. Ranjit Patil and Mr. Rishi Kapoor to please unveil the cover of the coffee table book. We'd also like to thank our knowledge partners Deloitte as well for this. I'm going to request you to please remain on the stage once again as we're going to take this segment forward with the felicitation ceremony as well. That's right, ladies and gentlemen, as we have already unveiled to you the cover of the coffee table book that actually features the best brands, and this evening is all about the felicitation of the best brands. Let me also inform you all that while the brands have been participating, few of the brands could not make it this evening, and some of them being SBI, LIC, ICICI Bank, Union Bank of India, and UTI. So first up, can we have a round of applause for these brands as well? The fact that they made it to list, though they couldn't join us this evening, but that shouldn't stop us from, sort of not congratulating them as well for their contribution. So on that note, what we'll do now is get started with the felicitation ceremony, and I'm going to be requesting our chief guest, Dr. Ranjit Patil, along with Mr. Rishi Kapoor, to do the honors as well. Moving on to our felicitation ceremony, ladies and gentlemen, for the best BFSI brands, and I'm also going to urge all of you to keep those tweets coming using hashtag #ETBestBrands. So let's get the felicitation ceremony started. First up, the first brand to be felicitated this evening, please put your hands together for Apollo Munich Health Insurance. We have with us Mr. Ankur Kharbanda, who's a zonal CEO of Apollo Munich Health Insurance. Well, moving on, ladies and gentlemen, the next brand to be felicitated is AU Small Finance Bank. Well, you know we're talking about the best brands, so let's have the best round of applause up next for Bajaj Allianz General Insurance. Well, the next brand to be felicitated this evening is Canara Robeco Asset Management. May we invite the team from Canara Robeco Asset Management to please come on the stage. Let's march ahead to felicitate the next brand, Capital First. You see, BFSI is one such sector that is beaming with a lot of enthusiasm owing to transformation in the country. So let's have an enthusiastic round of applause for HDFC. Well, let's continue with that momentum and let's hear it for Hinduja Leyland Finance. You know, sometimes we like the sound of the applause louder than the sound of the music. Can we have a loud round of applause for IIFL Wealth Management? Ladies and gentlemen, the next best BFSI brand, let's hear it for IL&FS Financial Services. Well, moving on to felicitate our next best BFSI brand, let's hear it for Indian Bank. The felicitation continues with our next best BFSI brand, Mahindra Finance. Well, up next, let's also hear it for Paisa Bazaar. Well, let's keep the applause going louder and louder, ladies and gentlemen. Well, it's also time to announce the next best BFSI brand. Let's hear it for PNB Housing Finance. Ladies and gentlemen, and on that note, can we also have a huge round of applause for our next best BFSI brand, Policy Bazaar. Looks like the tempo of the music is also fastened, so let's do that with the applause as well, and let's hear it for Reliance Home Finance. And yes, ladies and gentlemen, the applause will continue for RelianceSmartMoney.com. The next best BFSI brand. Ladies and gentlemen, RelianceSmartMoney.com. The next brand to be felicitated, let's hear it for SBI General Insurance. We'll take that enthusiasm and that momentum forward. Ladies and gentlemen, let's now have a huge round of cheer for Shriram Life Insurance. You know, when the music volume is generally low, the applause volume has to be higher. That's how science works. So let's have a loud round of cheer there, ladies and gentlemen. Shriram Life Insurance. Well, let's march ahead to also felicitate the next best BFSI brand for this evening, Sundaram Mutual. We're almost inching closer and closer, so let's have an energetic round of applause for the next best BFSI brand, Tata Capital. Are you all eager to find out our next best BFSI brand? Yes, I'm sure. Then let's have a round of applause for Yes Bank. And finally, ladies and gentlemen, the next best BFSI brand, which is also one of the best technology providers in the BFSI sector. Let's hear it for VMware Software India. Can we have a louder round of applause, ladies and gentlemen, our final brand to be felicitated this evening? Final best brand indeed. Congratulations. So I'm going to request you to remain on the stage for a couple more minutes as well. But first up, can we have a huge, huge round of applause there for all the brands that have been felicitated? First up, because we've all come together as a fraternity here this evening. And on that note, I'm also going to request Mr. Rishi Kapoor to please honor and thank our chief guest for the evening, Dr. Ranjit Patil. If I may please request Mr. Rishi Kapoor to present the shawl to our chief guest, Dr. Ranjit Patil. Thank you once again, sir. Thank you very much, Rishi. Well, on that note, ladies and gentlemen, we technically do come to the end of this segment of the program, but on that note, we're going to continue the conversations and the celebrations over cocktails and dinner. And with that, it's time for me to sign off. My name is Kavya R. Chavali. It's time for me to sign off, but let's continue our conversations and celebrations over cocktails and dinner. We cordially invite you all to join us, and please keep those tweets coming using hashtag #ETBestBrands. With that, it's the end of this fantastic edition of the Economic Times Best BFSI Brands 2018. Thank you very much.